Hello, everyone, and welcome to this edition of our 7 Investing podcast. I'm 7 Investing founder and CEO, Simon Erickson. I'm very excited for today's show because we're going to be talking about programmatic advertising. We've seen the world kind of unbundle the cable TV subscriptions we've gotten used to and start going over the top. And that's going to have some big changes for the digital advertising industry. And so I'm welcoming a very special guest, somebody who's an individual investor that covers this programmatic advertising space, and that's Dhaval Kotecha. Dhaval, a good friend of mine, really always looking forward to hearing your perspective on this market. Thanks for being a part of our 7 Investing podcast today.
I'm pleased to be here.
Dhaval, now we're going to do things a little different than our normal podcast because you actually prepared some wonderful slides for our presentation today. I'd like you to get a chance to go through those first, and then we'll follow up with a more detailed conversation. But if we could start this off with Professor Kotecha walking us through an overview of some of the things going on in the industry, I think that spot us up pretty nicely for a conversation afterwards.
Absolutely. I will share my screen and we can get going with the presentation.
Perfect. I will hand the floor to you, my friend.
All right. Awesome. Are you able to see my screen?
Absolutely.
Excellent. So I will be talking about the overview of the paid TV and the transition to OTT. As the linear TV, the ads were sold as upfronts. So what upfronts meant was the advertisers would approach the TV channels and they will sign a contract saying, okay, these are the ads that we are going to be buying from you for these particular ad slots. Now, these ad slots were bought based on like what shows are playing on that particular channel and when those shows are kind of broadcasted. And based on that, they are trying to guess what would be the user demographic that are viewing that show. And accordingly, they are planning to buy those ad spots. Now, the problem with the ad upfronts was that there was no measurement of like who is seeing your ads, and I cannot tell if the ads are performing well or ads are not performing well because I don't have any sort of data with my upfronts. Now, the world moved from upfronts to programmatic because of the pandemic, when what happened basically was during the pandemic, there was no original content coming in the linear TV, the live sports, those kind of stuff. So now what happened was people were paying for their cables and now they wanted to cut the cost. So what they did was they looked for options where they got like free content. Now, what happened was when the subscribers were cutting the cards and they were moving to seeing the free content, the marketers also were seeing that shift happen. And what that meant was they also started moving to where the subscribers were moving to, and they were moving to programmatic. And now with programmatic, what's happening is they have so much more data about what user is watching your show, and they could do is they could kind of target you specifically, target the subscriber specifically, and show them that ad, which is much more relevant than what upfront would be able to show, right? So this is what happens when the upfronts is the traditional TV buying here. The targeting is very limited because you are not sure who is watching your ads. But with the programmatic connected TV buying, you could target the households in real time. You could absolutely tell who is watching your content here, and you can target them. And that's where the connected TV buying, if you see like more CPMs compared to the lower CPMs on the upfronts. This is a graph from eMarketer where we are seeing the US pay TV versus non-pay TV households, and the pay TV households are declining rapidly over like the few years. And starting from 2019 to 2020, it went from 84 million to 77 million households, which is a dramatic shift in the number of households which are consuming the pay TV, and also the non-pay TV households, they are increasing. So what the pay TV households are your cable TV households, whereas the non-pay TV households would be your Rokus and anything that you are using the streaming services for. On the right hand side, I have one more stat where the spending, the total global ad spending, which is reported by Trade Desk, total is $725 billion. Out of that $725 billion, $230 billion are still spent on the linear television. Now, if this linear television people are cutting the cord, and now the marketers are not spending it on the linear television. Now we know where that $230 billion would be assigned to. And the answer is connected TV. We are seeing this pan out when we are seeing the connected TV ad spending grow up year over year. In 2019, it's $6.38 billion. 2020, it's 8.11, projected at 18.29 for 2024, which is huge. And if you look at one stat, which was from Magna Global, the OTT accounts for 29% of TV viewing, but so far only has captured 3% of TV ad budgets. Now, there's a big gap between this, just because if you see the ad budgets have not moved still where the viewers are moving. So there's a huge opportunity of the TV ad budgets moving to the companies, and the companies which are going to be a beneficiary here are the DSPs and the SSPs of the industry in the ecosystem, right? So there's a enormous potential here in the ad tech space as it stands here. This is a recent survey conducted by the Trade Desk along with YouGov, and this is December 2020. So this is a very recent survey. And if you look at the key findings, we are seeing the same findings here, which we saw starting Q2 and Q3 of 2020, which is cost is driving the cord cutting. People don't want to pay for the cable subscription. They prefer the ads, the AVOD basically, which is ad-based video on demand. Consumers look to CTV for sports. They conducted the survey where 39% of sports viewers are now watching sports primarily on ad-supported streaming platforms or social media platforms. And the TV buyers on the other side, they are also rethinking the upfronts, because with upfronts, you get very little flexibility. And you don't have that level of precision as well with upfronts. And on the other side, we are also seeing that the marketers are boosting the connected TV skills. Marketers are favoring CTV because it's more effective than the linear TV. So those are the key findings, and it is all going in the direction where CTV is benefiting here. We are going to see this trend continue in the next few years. Roku also, if you saw, they posted some preliminary results, early preliminary results for the Q4. And this was the first time they hit the 50 million active accounts as of December 31, 2020, which is 285% growth from December 31st of 2016. And in Q4 itself, they grew like 5.2 million accounts. And if you look at year over year, the active accounts, it was a 45% increase in year over year. And if you look at the hours streamed, which is 58.7 billion hours. That's 55% year over year. Hours streamed in just Q4 is also 55% year over year. This is tremendous growth in the connected TV space. Um, I also wanted to share what's taking place behind the scenes, and I had posted a few of these slides on Twitter, but I still wanted to go over how the real-time bidding works in the background, and also wanted to talk about a few players in the ecosystem. So on the left-hand side, it begins with the publisher. In the middle, you have SSP, and on the right-hand side, you have the DSP and the advertisers. So basically what happens is the user opens a publisher website on their device. They are integrated with SSP, and SSP is the one who is responsible to conduct an auction. Here, SSP is a company like Magnite or Programmatic, which are also integrated with the DSPs. Now, on the DSP side, we have the Trade Desks, MediaMath, AdForm, which are um, responsible to be having those campaigns running on behalf of the agencies and the advertisers, right? So in this scenario, if the user opens a website on the device, the request gets sent in the real time to SSP asking them to fill that ad spot. The SSP is responsible to send those requests to the DSPs, which it has integrated with. And the DSPs will look at what information is coming in the bid request. And based on that, they have those campaigns running on behalf of advertiser. They determine what bid price they should bid on, if they even want to bid on. And once they bid on that particular request, that response is sent to the SSP again from all of them if they choose to bid. And SSP is responsible to conduct an auction and determine which was the highest bid price and send that ad to the publisher's device. Now, all of this thing happens in less than 100 milliseconds, which is very fast because the ad is loaded almost at the same time where the content is being shown on the device, right? So this helps to monetize the publisher because publisher is the one which is generating that content and they want to monetize themselves. On the other side, the advertisers are also happy because now the advertisers can reach to the people who are on the publisher's device. They are wanting to view that content and they deem the end user as relevant for their brand, right? So that's a win-win for everybody in this ecosystem. And it's not something where the advertiser is not knowing who they are sending their ads to, right? So uh, this is how the real-time bidding works. Um, Now, I also wanted to touch upon the Trade Desk Unified ID solution because this is an important thing that has come up in the recent past. But I wanted to give a brief history of why the TTD Trade Desk Unified ID solution is needed. So if I want to go back, look at some history on how the cookies came into picture and all these browsers, what they are doing. Basically, if you look on the top side, it's the first party cookies. On the bottom side, there are third party cookies. So moving towards more privacy, if you look Safari, Firefox, and Chrome, right? Those browsers are coming up with innovative solutions to provide more privacy to the end users. And what that means is like there are first party cookies and third party cookies. So cookies basically are like random strings that are set on the user's browser. They help tracking that particular user. Now, the first party cookie is where the publisher is setting the first party cookies on your browser just to be making your user experience much better, which means that If you say, I want to have 30 items loaded on my page when I visit the website, then that preferences get stored in the first party cookies, so that when you go back to the same website, it's the first party cookie, you get better experience, right? Now, the third party cookies, on the other hand, is used for tracking purposes, where the third party cookies is not something that is owned by the publisher, but it's by someone else. And they could use that cookie to track you and basically understand, okay, what are your behaviors? And based on your behavior, they could try to send you an ad, right? Now, because like the third party cookies are um, not a good way for like all these browsers, and particularly Apple and Google here, what they're trying to do is they're trying to get away with the third party cookies because they want to protect the privacy of the end users. So Chrome announced on 2020 that they are going to get rid of the third-party cookies, and that was a big deal. There was a lot of media around it, but this thing, like on Safari and Chrome, on Firefox, this has been there since 2014, right? So why was that a big deal? Just because Chrome market share is around 64%, whereas Safari and Firefox around like 19 and 3%, and the rest of the browsers are very less. So when Chrome announced it, it was a big deal. Now people need to come up with a solution to make sure that now that signal is lost, how would we be able to track the users, right? So now Trade Desk is coming up with a solution, and this is how basically the cookies are shown on the web page, where there's no good explanation on what the cookies are getting used for. They say, okay, we use the cookies for personalizing your experience. By continuing, you agree to use our cookies, right? This is not a good information provided to the end user, and every user will tend to think, okay, cookies are bad, right? So we don't want to use cookies. They might not agree to use the cookies, etc. So this is the solution that Trade Desk came up with, was OpenID. Now, cookies, what can happen is I could remove all the cookies from the website, and I could just lose the information that the DSPs will get, that can get lost, right? So now what Trade Desk is coming up with a solution is called a unified ID solution, which replaces cookies, and it upgrades the privacy controls for the consumers and also preserve relevant advertising. So people are not bothered with, like most of the people are not bothered with relevant advertising. What bothers them is irrelevant advertising, right? So if I am a 20-year-old unmarried single person, right, I am not a person who I should be seeing like an ad for a diaper, right? So again, like people are not wanting to look at those sorts of ads, but if the ads are relevant, then yeah, why not? The solution here, what Trade Desk is doing is it's coming up with a hashed encrypted open source um, solution where you cannot convert it back to the email address, right? So now this OpenID, it has to work with all the players in the ecosystem, and we are seeing a lot of partnerships coming from SSPs and also coming from the publishers, right? So the SSO consent here is single sign-on across the internet. So what this will do is you go onto that website once, and you provide your email address. Based on that, they will know, okay, who you are. So you need to provide the email address once for every website you visit, if you want to go and read or access their content, right? So framework for publishers is very important, because this is going to be driven by the publishers, because publishers will be the one who would be collecting those email addresses and would be responsible for the success of this solution, because now they are responsible to explain the value exchange to the internet users, right? So Jeff Green talks about quid pro quo of the internet. which is you allow us to send you relevant advertising for in exchange of free content, right? So publishers is where everything starts, and publishers are responsible to make that clear to the end users. And therefore, this framework is also made available by Trade Desk to them, right? And then this is controls for consumers, where consumers can say, okay, I want to be shown, I'm okay to get the ad from this advertisers or this type of advertiser. I don't want to see the ads for this type of advertiser. So I don't want to see an ad for, say, a car. So I want to block, say, automotive at like on a higher level, but I'm okay to see the ads for, say media or any sorts of, say, books, right? And therefore, like I as a consumer would be able to control that, and this is a win-win for everyone. Now, I prepared us a graphic here to explain how this works. So basically, the first step, publisher's website, you put in the email address. If you are visiting it for the first time, you submit that email address, and what the unified ID code does is it hashes that email address, and then it encrypts that hash, converts it into a ID, which is a TD ID, and that is provided to an SSP. Now, SSP is responsible to be forwarding it to the DSPs, and based on the unified ID, they are able to track that user. They don't need cookies here to track. These unified IDs are more than enough to determine, okay, who is this user based on his email address. And the SSP then sends the relevant ad to the publisher website. The most important thing here is the encrypted hash. They cannot, it can never be converted back to the email address, which is a PII, which is personally identifiable information. And this is where the security of the unified ID comes into picture. And yeah, that was it.
Dhaval, that was fascinating. Thank you for such a thorough presentation, walking us through what's going on. Now, you and I are both engineers, so we're going to love getting into the details of the hashes and the IDs and all of the nitty gritty. But just to kind of lay the land of this in layman's terms,
Right.
we've kind of at the far end got the publishers, right? So Seven Investing is creating content. People
Right.
are coming to our website. We're publishing that out there, and that's kind of at the far end of the spectrum. And then in the middle, you said DSPs and SSPs a lot.
Right.
So if Seven Investing was to want to use an ad tech platform, a supply side platform, an SSP, to manage a lot of the inventory we have on our site. So we might want to start showing some advertisements. We're not, by the way, this is purely hypothetical, but if we were wanting to, we might work with one of those companies like Magnite to start actually programmatically placing those advertisements. And of course, there's another side of that to a demand side platform, a DSP, like you said, that's then working with the advertisers themselves and the ads that they're wanting to place. And it's all kind of in the middle, taking place programmatically. My big first question for you is, it seems like that entire ecosystem is in flux. You talked about Unified ID 2, and Trade Desk and companies like Magnite are pushing for an open source, less invasive system to start placing those ads.
Right.
Are you seeing that the publishers are also on board with these changes and these moves away from cookies to a new solution like that?
Yes, I think that publishers have no other option but to embrace this new technology, because if publishers will not start embracing this sort of unified ID, then what will happen is third-party cookies will go away, and now publishers will not have. So publishers will not be able to monetize their content in the best possible way, right? So now the CPMs will drop for that publisher, because now advertisers don't have the information on the publisher, right? So the most important part in this puzzle is the publisher being able to embrace this unified ID, and it starts with them because they are the ones where the end users are going to for getting the content.
And we've been seeing this and kind of framing programmatic so much in terms of internet websites, right? And then everybody went after mobile at the same time too, and we did header bidding and all the other uh, innovative things taking place in this space. But you mentioned something very interesting, that television is perhaps the next horizon for this market. What was the stat that you said? There's a $230 billion in linear TV spend, but only $8 billion of that's taking place on connected TV or programmatic TV.
Yes.
So 30x increase. I mean, are we seeing the same transition in television that we've seen in the internet and desktop and mobile?
Yes, absolutely, and this has been a shift that got accelerated just because of the pandemic. And Anthony Wood, the CEO of Roku, he mentioned this as the decade of streaming, right? So people are moving towards the content which is ad supported, and like based on the surveys again, right? What we saw was people don't want to spend more than $20 for any sort of streaming services. So what they are trying to do is they are trying to add a free ad supported platform along with the streaming services, right? So basically, if you look, say, if I want to own, like I have a streaming service, say Netflix, then I'm paying a certain amount for Netflix. Then if I am like I want Disney, then I'm paying something for Disney. Then like you can keep piling up that cost, and that cost will be exorbitant at one point. So what people are trying to do is they are trying to keep those services, like some of them, but then also trying to also go to channels like Roku channel, where they are getting free content, but they will have to just see those ads, right? So that's where the world is moving. And according to Roku, like all this content which we are seeing, we are paying for, they will be ad supported at one point in time.
And do you have opinions on what type of content is going to drive advertising in this new over-the-top world? I mean, to set the stage for that, I mean, bundled cable was so heavily subsidized by live sports, right? ESPN in particular commanded a disproportionate size of cable bills just because everyone was tuning in and buying the bundle just because
Right.
they wanted to watch live sports. That's not the case anymore. We see, companies like Fubo that
Yes.
are, giving people over the top options, or the skinny bundles that you now have some live sports coverage. I've even watched football games on Twitter this year for free.
Right.
Um, how do you think that live sports is still the premium content that people are going to watch, or if not, what content is going to be driving the advertising prices in this new over the top world?
Yeah, so I definitely think live sports is going to drive advertising on the connected TV, because that's the shift that we saw when everything stopped amidst the pandemic, right? So original content, right? So that stopped, and that moved people from the linear TV. They cut the cable and they moved to the connected TV because of all those reasons. Now we are not expecting them to go back to switching to linear TV again, like getting the cable subscriptions again. So they will, people who have moved already will stick to the connected TV for the sports and original content. And yeah, so coming to your point, I do think that sports is going to be a big driver there.
Sure. And kind of in the middle section, right, between the publishers we talked about and the advertisers, let's talk about the DSPs and the SSPs, the ad players, the ad tech platforms. You've done a lot of work in this, including your personal work, Dhaval. Which of these players do you think stands out? We've talked a lot about the Trade Desk as a
Right.
DSP. We've talked about Magnite as an SSP, but you also mentioned Pubmatic, and I know LiveRamp is in there. There's
Right.
several other players. I mean, how do you see the relationships between those? Is there consolidation that happens in this space? And who do you think is the front runners in terms of the platforms?
So In ad tech, everything works based on relationships, and if they have good relationships, that's where they are going to do well. And I see on the DSP side, Trade Desk is the number one player, and I continue seeing them as a leader in that space. On the SSP side, I see Magnite as the top dog on the SSP side, and again, they have um, relationships with publishers and also relationships with the DSPs, right? So again, on the exclusivity of the content as well, Rubicon and Talaria, when they merged, and they became Magnite. With Talaria, they had exclusive relationships with Hulu, Disney. So uh, basically, when they have those sorts of exclusive relationships, that is very important in the ad tech space. And I do think those are the two companies that are really poised for success in the coming future, when we are seeing such over the top connected TV trends spanning out. And also Roku, right? So Roku is a very special player in this space, because now they own the content as well with Roku channel, and they have a lot of other streaming platforms that people can play on their platform too. And also they have something called OneView, which is the data zoo acquisition, which they made a couple of years back. So they are also in a strong commanding position in this space, specifically for connected TV.
And I'm curious, do you have any thoughts about Netflix? This is kind of tangential to this conversation because Netflix wants to charge you a subscription and build all of its own content and not have any advertising. But do you think Netflix continues to be as dominant as it's been for the last 10 years? Or is this kind of a shift away from what Netflix has been trying to build?
So Netflix is a different kind of a story, where they are charging people for subscriptions. But again, like I saw Jeff Green, CEO of Trade Desk. He talks about, he envisions Netflix to be like turning to a AVOD model from a SVOD model in the near future, because he thinks that it's not sustainable for Netflix to operate based just on the subscription, because now majority of the people they are able to, like, they have a subscription to Netflix. So where would the next growth come from? International is one avenue, but still there are uh, limitations on that front too. And the best way for them to move forward would be to provide a model where they could have a kind of a model where they could have ads along with their subscription service, and do some sort of a hybrid model instead of just relying on the subscription services.
Yeah, it's very interesting. And even comparing Netflix to a company like Disney, who is, of course, all in on content. Disney Plus is blowing it out of the water right now, completely knocking
Yes.
it out of the park in subscribers. But then also, they tried out the Hulu experiment. They've been very willing to work with advertisers and building out kind of the front end of the service too.
Right.
Dhaval, we'll change gears in just a second here, because I'd like to hear some advice that you have for individual investors, which is who our audience is for our 7 Investing podcast. But before we get to that, could you tell us a little bit about the FinTech Summit that you are working on right now, and what that is, and why we might be interested in this?
So we came up with this idea of FinFit Summit, where we wanted to share knowledge, and we have a lot of people on FinFit that people follow on day-to-day basis, and they share like tremendous content. And one of them is you, and we have almost around 13 speakers confirmed at this point. 2 of them are still tentative, but a 15 speaker lineup spanning over it like a day and a half to 2 days. Um, and people are just going to learn a lot from this summit. So we are just trying to share as much information as possible from the amazing speakers that we have got, and grow together. So it's going to be a great thing. It's going to be huge. We have almost have around 1,700 people showing their interest in the FinTech Summit. So FinTech Summit is going to be around the second week or the third week of March. That's what we are aiming for at this point. We are working with the platform partners. We are working with everybody to make this happen. So stay tuned for that. We are pretty excited for that summit.
I'm very excited about it too. Right? Our mission with our company is to empower individual investors, and you put together quite a lineup of some incredible investors that we're going to all be able to learn from. In a single day, right, Dhaval? This is going to be a single day, or is it going to be a little longer?
So we were initially thinking of a single day, but with 15 speakers, if people are talking about for an hour, then we would want to go like hour and a half to, a day and a half to 2 days, right? So that's the plan.
Yeah, really looking forward to that. We'll put a link for people that are interested in the FinTwit Summit into this podcast description. But let's close out with some of your advice as well, Dhaval. I've always looked to you. We chatted actually earlier this year when we interviewed you about investing in India. You came with an incredible, thorough presentation for that as well. You've got another one here talking about programmatic advertising. But let's kind of look maybe at the 10,000 foot level. Just as an investor, I really liked one of the tweets that you had earlier this month, which you retweeted from someone else, but it said, if you get 1% better every single day of the year, look at the compounding of where you'll be after 365 days. And I love that. And I just wanted to kind of close out with you, maybe providing a couple tips that you have for individual investors who want to do a better job in their returns in the stock market.
Right. So I would say I'm not capable of providing advice to anyone, but what I would say is this is the advice that I give to myself every single day, right? So I have 5 things which I tell to myself, right? One thing is keep it simple, because in this, like when it comes to investing, I have tried a lot of different tips and tricks. And ultimately, I have come to a realization that if I keep it simple, I dollar cost average into my investments and put every single paycheck into the stock market every single month or bi-weekly, then I will see much better results than just trying to speculate or just trying to go and jump from one stock to the other, right? So keeping it simple is the first thing that I tell to myself. The second thing is less is more when it comes to investing. So I was a type of investor where I tried to look at the stock prices every single day, multiple times a day, and I still try to, and I still do it like multiple times a day still, but I don't try to kind of make decisions based on what's happening in the market on a day-to-day basis. Just trying to focus on my work more and then looking at the stock market less. So less is more when it comes to investing. The third thing is know what game you are playing. So if you are looking at someone who is making 100% returns, you don't know what game they are playing. You just need to look at your game and try to play it your way. So if you look at the media, CNBC, they are playing a different game to you if you are just trying to invest for long term, right? So if you are listening to a trader and then you are an investor, then you are not understanding what game you are playing. You are taking cues from someone else. The fourth thing that I tell myself is risk is something that is not knowing what you are owning, right? So if I don't know what I am owning and just trying to take cues from someone else who is telling me, okay, this is the best stock here, I don't understand it, then that's not going to work. And that's where like people like you, Seven Investing, provide a stellar research in getting that risk level down. Because if people are not understanding the business and they are wanting to own that stock, they don't know what they are doing. So once the stock goes down, then they don't know if they want to add more or they want to sell, right? And the fifth thing, the most important thing, this is what I learned from Steve Jobs, is stay hungry, stay foolish, right? So be curious and try to learn every single day. and you will be better if you try to learn on a daily basis. So those are the few advice that I have it written in front of me, and I try to follow them on a daily basis.
Those are fantastic words of wisdom, Dhaval. I love those. Keep it simple. Less is more. Know what game you're playing. Risk is not knowing what you're getting into, and then stay hungry. I really like 3 and 4 together. I think that is the perfect description of you. You see so many people out there that are trying to, it's almost FOMO, right? Fear of missing out. People are posting, oh, I'm up 300% this year. And everyone just says, oh, well, let me just buy immediately whatever stocks they're buying without really knowing what they're getting into. And maybe that doesn't match their risk tolerance. And you definitely want to know the companies that you're investing in. And certainly chatting with you on this podcast has opened my eyes and hopefully our audience's eyes to what's going on in advertising and programmatic and the internet. And then we chatted with you about India. So we'll have another topic, I'm sure, in a few months to discuss as well. But I really appreciate your perspective, as always, here with our 7 Investing podcast.
Absolutely. It was a pleasure.
And once again, Dhaval Kotecha, our guest today. You can follow him on Twitter. And also follow his FinTech Summit that's coming up here in a few months. Really appreciate his perspectives on our podcast today. And once again, we're here to empower you to invest in your future. We're 7 Investing.